Welcome to this episode. Before we begin, please note that the information presented here is for educational and informational purposes only and does not constitute investment advice. Financial markets involve risk, and every investor's situation is different. You should always conduct your own research and make decisions based on your financial situation, risk tolerance, and future expectations. In this episode, we are analyzing Bitcoin through three angles: technical levels, fundamental macroeconomic factors linked to the US market, and historical market cycles, followed by an overall analytical opinion. From a technical perspective, Bitcoin is trading around 71,000 at the time of this recording. After previously breaking above 77,000, price action suggests pressure on the $70,000 level. This level is currently acting as support, but many market participants expect it to be tested and potentially broken. If 70,000 fails, the next major support zone is estimated around 54,000 to 50,000. If 50,000 were to break, further downside could theoretically extend toward 40,000 or even 30,000. While those lower levels are possible, a move toward the 50,000 area appears more plausible based on current market structure. From a broader macro and fundamental perspective, recent weakness in Bitcoin is closely tied to expectations surrounding U.S. monetary policy. The absence of rapid interest rate cuts in the United States has reduced appetite for risk assets. This environment impacts not only Bitcoin, but also highly leveraged companies in speculative segments of the U.S. equity market. As risk sentiment shifts away from risk-on behavior, declines have been observed across U.S. equities, particularly in small-cap stocks and growth-oriented indices. When U.S. small caps and the Nasdaq experience downward pressure, Bitcoin has historically shown a strong tendency to move in correlation with those markets. Beyond technicals and fundamentals, market cycles play a significant role. Historically, Bitcoin has followed cyclical patterns consisting of extended bullish phases followed by prolonged corrective periods. A bullish cycle typically lasts over 1,000 days, and this pattern has already played out, with Bitcoin rising from 2022 through 2025, a period of roughly 1,000 days. Following such extended rallies, historical data suggests a corrective phase lasting approximately 365 days. Based on this framework, the peak reached in October 2025 would imply that the current market is still in the early stages of a broader corrective cycle. As of February, roughly 2 months into this decline, that framework would suggest several additional months of volatility and downward pressure before a potential return to a sustained bullish trend. It is important to emphasize that none of these factors guarantee a specific outcome. Technical indicators, macroeconomic conditions, and historical cycles can align without producing identical results every time. Markets are probabilistic, not certain. Price could continue to decline toward lower support levels, or it could reverse earlier than expected and move significantly higher without revisiting those areas. From a risk management perspective, the key consideration is not predicting exact bottoms or tops, but managing exposure in a disciplined way. Entering markets aggressively at a single price level carries the risk of short-term drawdowns if prices continue to decline. At the same time, waiting indefinitely for perfect conditions carries the risk of missing upside if prices move higher sooner than expected. Structured accumulation strategies and position sizing that align with long-term objectives can help reduce emotional decision-making driven by fear or greed. Overall, Bitcoin remains closely linked to U.S. monetary policy expectations, equity market sentiment, and broader risk appetite. As long as interest rates remain restrictive and risk assets face pressure, volatility is likely to persist. Patience and disciplined strategy remain essential in navigating this phase of the market cycle. If you want to stay up to date with the latest analysis and market developments, make sure to subscribe to the channel so you don't miss any future updates.